All right, so it's Saturday morning. We are on our way to K-Talk radio station. We've got our special guest, Joel Stice. Now, Joel is a loan officer for Citywide. He's a top loan officer. And here's what's really cool. Joel is also family of Steve Gorman, who is the owner and the gentleman who created Citywide. Joel happens to be his nephew. So Citywide is a family-owned business owned by Steve Gorman, who Joel happens to be the nephew of. And so Joel has a lot of experience, a lot of inside information on Citywide from where it started as a small little brokerage to this massive company that it is today. So I'm really excited to interview Joel and kind of learn the way Steve Gorman and the Citywide family took a company from, its infancy to the massive company it is today. I always love hearing how people will grow a company from something small to all of a sudden something huge, and the success that went behind it. And what's also interesting is all the trials and tribulations that went behind it, but it's always so inspiring for me to hear about these companies that hit massive growth. So continue watching this video, because we are just about to get ready to get to the K-Talk radio station, where we will go ahead and interview Joel Stice.
They wouldn't hear it, but yeah, right now your mics are good, so whenever you want to jump in, just unmute these and kind of, like I said, ease down if you want to.
Okay, perfect. Good morning, everybody. You are listening to K-Talk Radio, 1640 AM. This is the show, Utah Home Sweet Home. I am your host, Yoshi Shiraki, and we have a very special guest today, Joel Stice. Joel, thank you for coming today.
Absolutely, Yoshi. So fun to be here.
Yes, awesome. So today on the show, here's what you're going to be hearing. We're going to be talking about the ins and outs of doing a real estate transaction through the eyes of one of the top loan officers out there. Okay, we'll also be discussing the top questions he has asked by his clients. We'll also be going over a nightmare story. And the lesson you can learn from a nightmare story, it's always much better, in my opinion, to learn from someone else's mistakes than my own. I had plenty of my own.
Absolutely.
Then we're going to go over the step-by-step on a real estate transaction when borrowing money, so you guys know what that process looks like if you're thinking about buying a home. We'll fill you in on how that goes down and so much more. So let me tell you guys a little bit about Joel, my guest today. Joel is a local Utahn from a very small family who grew up right here in Salt Lake City. So, whereabouts did you grow up?
Sugar House.
Sugar House, great.
Yeah,
Okay.
Haven't moved far.
Yeah.
Still live there now.
Okay, great. He graduated from the University of the Pacific out of Stockton, California, with a degree in business and finance. He has a wife and 3 children, and they currently live in Sugar House. So yeah, there you go. He is a loan officer at Citywide Home Loans and initially started working at Citywide back in 2007 and currently helps incredible families across the Wasatch Front with their home financing needs. He grew up in the mortgage business because mortgages run in the family. Can't wait to talk about that. Mm-hmm. Citywide has been Joel's family business since its inception over 20 years ago. It started as a small broker shop by the founder, Steve Gorman, but it's grown into a nationally recognized correspondent mortgage company. As of November 2018, Citywide has become a strategic partner with Stearns Lending LLC and Blackstone, an extremely large private equity firm. That's huge.
Yeah, really actually pretty historic.
Yeah, absolutely. And do you mind sharing who Steve Gorman is? I was reading your bio, and I didn't know if it was a secret or...
Yeah. Steve Gorman is my mother's brother. So
okay.
He is my uncle.
He's your uncle.
Mm-hmm.
So it definitely is a family business.
Family business, very small.
Very
Not
small.
big. It's a small Eastern European Jewish family.
Okay.
Yep.
Yeah. Very cool. All right. So we're going to dive into this. I'm always interested on what my guests get asked by their clients, the top questions that people ask them, because if these are questions that are getting asked over and over and over again, usually they're probably really good questions to consider asking when you're going through this process. So if you're out there listening, then pay attention, because Joel's going to share some great insight right now. Joel, if you don't mind going through one at a time, your top 3 questions you get asked, and elaborate a little bit on, why that's a good question, maybe the importance of it, and maybe if it's a question that you think should be asked differently, but along the same lines. So feel free to kind of share your thoughts on that. Would you mind sharing what those questions are?
Yeah, so number 1 question that I get asked, which is actually not really the right place to start, but it is a question we get asked a lot, is what are the rates?
Yes.
And there are reasons why that isn't really the best place to start, but for whatever reason, inherently, that's what everyone focuses on.
Got
the
it.
Rates.
Got it.
And the reason that is not the best place to start is there's so much more to a mortgage than just the rates that you're getting. It also is important to ask, what type of loan terms, the specific financing, the down payment requirements, and really relying on that loan expert to guide you,
right,
and probe and ask the questions to the client. So if you're working with somebody that isn't asking you questions, that's a sign you may need to find somebody else. They need to really probe and peel back on your situation as somebody trying to get a home loan to really understand your needs.
That makes sense. Everybody's situation is different.
Everyone's.
Yeah. Okay.
Absolutely.
Yeah. Very cool.
The second question that we get asked a lot, which it's a good question, is there 100% financing? The answer to that question is yes.
Okay.
There are loans that are created in a way where you are literally borrowing 100% of the value of the house. There are trade-offs to it.
Okay.
You may have a slightly higher interest rate. You may have a second mortgage.
Got it.
You really can get into a home with very little down, especially if your great real estate agent can negotiate that the seller of this home pays your financing costs.
Got it.
It's not always a guarantee that will happen, but
right.
If they can, you really can get into a home for very little down.
Got it.
And very little out of pocket.
Oh, very cool.
Mm-hmm.
Excellent.
Yeah.
Just out of curiosity, what needs to happen as a whole for something like that, for 100% financing? I mean, does the person have to have like immaculate credit, and then maybe the property needs to be undervalued, or can it be at appraised value and maybe have decent credit? Is there certain criteria where?
Yeah. So there is actually a very large, I don't want to say financial institution, but it is a very big player in the space of affordable housing, and the entity is called Utah Housing.
Okay.
And they have 4 specific home solutions for a primary residence home buyer.
Oh.
And they have various requirements. They have income restrictions, meaning you cannot make above a certain amount to qualify for this particular loan.
Interesting.
Yep. Also, you have to have specific credit scores for each of these 4, and some have better rates and have a higher credit score requirement versus some of their other options, but they have enough available to kind of meet most clients' needs if they're really interested in 100% financing.
Got it. Okay, great. So they don't even have to be high income earners or maybe the best credit.
Yeah, in fact, it is a little discriminatory in the sense that if you are a high income earner, you cannot qualify for this loan program.
Interesting.
So it is a very, very popular way to finance a home if even 3.5% of the purchase price is not something that the borrower or the client would have saved.
Wow.
So they can even borrow, like I said, the down payment itself.
That's fantastic. Yep. It really gives everybody an opportunity to be a homeowner. Mm-hmm. Okay, very cool. Do you have to have 2 years of work history at the same place?
Have to have 2 years of work history. Doesn't have to be at the same place though.
Oh, okay.
Yep, it just is a continuous 2 years of full-time work.
Got it. Does it have to be same industry, or could it literally go from one industry to a completely different industry?
If you're full-time and it's a type of income like an hourly wage or a set salary, it can be in two different industries. But if we're talking about some type of commission or bonus,
Yes.
obviously sales in the auto business is different than sales in, say, software business to business
Oh, sure.
type of commission. So it's hard to average those two industry
Right.
incomes over a 2-year period and qualify somebody.
That makes
So,
sense.
Yeah.
Okay.
As you can see, there are details involved.
Lots of
and
details.
It's important that you're working with someone that's done it before.
Okay, very cool. Thank you for sharing that, Joel. So what's the third question that you typically get asked a lot?
How quickly can you close my loan?
Yes.
And that's it's actually asked quite a bit, not only by the client but also the real estate agent representing the client.
Sure.
It's a very competitive market right now, and sellers need to sell and buyers need to buy, and usually the seller needs to sell their home in order to buy their new home. And so
Right.
it ends up kind of making a domino effect scenario where, if you can get it done on time or faster than the industry average, you have an advantage. But it does take some symbiotic work
Right.
between you, the borrower, and your preferred mortgage lender. Getting a home loan does take effort in terms of providing the sufficient documentation to qualify. So if you're going to do it quickly, you need to be prepared to get that
Yeah.
documentation to the lender as quickly as they ask for it.
Right, that makes sense. Yeah, I see that a lot where someone will be asked, for a certain document, and then they'll get around to it on the weekend and finally email it 3 days later. That's probably not the fastest way to get your loan closed.
Exactly. Yeah. Yep.
Got it. So how quickly can you close? That's a great question. A question I get asked a lot is, I'll be talking to people and they'll say, I went to get pre-approved, chat with the loan officer, and they said that I didn't qualify for a loan. So now we're just waiting for this or that to happen, more income or whatever, maybe paying down some debt before we try again. Is it pretty cut and dry? Is it pretty black and white that if you don't qualify with one company, let's say, hypothetically, just in this example, Bank of America or Zions Bank, that they wouldn't qualify with, let's say, you over at Citywide? Should they truly just stop for now, or should they shop if one person turns them down? I get that question quite a bit by people that have gone through the process and then were told by one person that they didn't qualify.
Well, it is important to shop around.
Okay.
Because not all loan officers are created equal.
Got it.
And so what one person may say isn't possible, another may actually be able to do. And that all is rooted in the experience of the professional representing that client.
Mm-hmm.
Somebody that's been in the business for 15, 20 years that knows loans and has seen the loan guidelines change over that period of time will probably have a very good sense of how to get that client to qualify, if it's at all possible. And if not, they hopefully are a true professional that can help build the relationship with that person.
Right.
Not it doesn't want to be just a transactional experience, but also be in a relationship with that great family.
Yeah.
Where they're the go-to. But yeah, it is a great idea to shop around because not everybody knows as much as others, and
I agree.
The depth of experience is super important.
And like real estate agents, not to knock on this, but some people do it part-time.
Mm-hmm.
They have a 9 to 5.
That's right.
And then they have their real estate license or their loan officer mortgage license, and maybe the experience isn't there to figure out how to get this person to qualify because they don't do a lot and they do it part-time. And like you said, I guess what I'm trying to say is, yeah, not all loan officers or real estate agents are created equal, and neither are all NBA players, right?
Exactly. Yeah.
Not everyone plays as well as Michael Jordan played, and yet they were in the NBA, but not even basketball players or attorneys or dentists or doctors for that matter. One day I might get LASIK eye surgery. I wear glasses and contacts.
Yeah.
And I will definitely do my due diligence to make sure I find the best LASIK eye surgeon before I...
That's such a good example, Yoshi, because no one thinks that one surgeon would be less competent or skilled as another, but that's simply not true.
Right.
Right? And
right.
that's super applicable in the mortgage industry.
Yep.
And in the real estate side of things too.
Yes.
So.
Awesome. All right. Excellent. Joel, thanks for sharing that. We're going to go to a commercial break now, but stay tuned because Joel's got the nightmare story that he's going to be sharing with us. I love the nightmare story because, again, it gives me an opportunity to learn from someone else's mistake, learn the lessons. I surely go through enough mistakes and lessons on my own. It's nice to learn from other people's mistakes. So stay tuned. We're going to cut to commercial break, and we'll be right back. Okay. With smartphones and technology making life a little easier, the Snap Leash has also been designed to make life a little easier for you and your pup. Whether you're out on a stroll in the park, or possibly a walk through the city, or maybe even a hike up in the mountains, the Snap Leash is the perfect leash for you. The Snap Leash can easily and conveniently convert into 7 types of leashes, making the Snap Leash the most convenient leash in the world. What other leash do you know that is 7 leashes in one? With the Snap Leash having appearances on the Today Show in New York City, TV 47 in Dallas, Texas, and ABC4 on Midday, Utah, you are definitely going to want to take a peek at what the Snap Leash can do for you and your best friend. Make life a little easier for you and your pup, and visit www.snapleash.com today. All right, guys, we are back. You are listening to K-Talk Radio, 1640 AM. This is the show, Utah Home Sweet Home. I am your host, Yoshi Shiraki, and our special guest is Joel Stice. And you'll have to bear with me. Mohammed is giving me a lesson. I thought it'd be fun to kind of learn how to use the keyboard. Mohammed's the producer here at the show. And I'm not doing a very good job because he's stepping in and basically doing everything. I might as well go sit where I normally sit and let him sit. I'm definitely a slow learner, Joel.
Hey, you and me both.
Awesome. So, Joel, I'm going to make this a little bit higher for you so that it gets a little bit more comfortable for you. Okay, I just adjusted Joel's microphone. Joel, the Nightmare Story is one of my favorite segments of the show because I always get to hear what these people went through in a situation, and it gives me another thing to be on the lookout for so I can learn from other people's mistakes. Mm-hmm. So, do you mind sharing the Nightmare Story that you have planned for us today?
Yeah, absolutely. It just so happens it's happening at the moment.
Interesting.
Yeah. It's not uncommon that clients are misinformed or misled, misguided by what they perceive to be a professional, a licensed loan professional, and in the end, they're kind of put in a very tough situation. So this particular client was quote unquote pre-approved with ABC Mortgage Company, we'll just call it.
Okay.
One of our competitors.
Sure.
And in fact, this particular client was using this very, very high producing, very top producing loan officer.
Got it.
And there are, some details there that we can talk about. But after a little loan sleuthing or investigative work, it really was obvious on our side they were never really pre-approved for this particular loan program to begin with.
Oh, got it.
They had what we call gone under contract or made an offer on this home back in August, and for whatever reason the length of time for this particular seller had to be a little longer than normal. So our clients have been sitting around waiting. And the real estate agent that is representing them is somebody that I work with a lot.
Got it.
He's a great realtor, and he actually referred these clients to me earlier in the year. Like, we're talking January of 2019.
Oh, wow.
And some of their family members said, no, you've got to use this guy. He's great.
Yeah.
Despite the efforts of my real estate agent to,
Yeah.
have them work with us at Citywide.
Right.
Well, it's Halloween.
Okay.
I get a text message with a little screenshot of their text thread saying that the loan officer representing them at this mortgage company said that they needed to pay down a credit card that has a balance of $5,000 or they don't qualify. But now keep in mind, they were supposed to close
Yeah.
on the 4th of November, which was the following Monday.
Oh, geez. They had a long time under contract to just find that out at the very last minute.
Yeah, so, just imagine that you are daydreaming about this new home with a family. You've spent close to $1,000 between a home inspection and an appraisal, and now, and they were qualified, quote unquote, for the loan program that has some down payment assistance. So coming up with money to pay a $5,000 credit card off is a little hard to do.
Yeah.
The Friday before you're supposed to close.
Right.
And needless to say, put a lot of stress on them. And
sure.
My real estate agent, said, hey, I need you to take a look at this and see what we can do. So we are going to close their loan. It's going to be this month.
Oh, wow.
And we are just doing a completely different loan program and making it work. And they're really thrilled. And, they've been put through a lot. The sellers are super stressed as well.
Oh my gosh.
If you think about it, they're a client too. They're actually relocating across the country.
Oh wow.
They have to start a new job. They don't know if that's going to happen. And
right.
They have to move their life. If any of you have ever moved, you know how stressful that can be.
Yes.
So it's really a pressure cooker, stressful situation. And this does happen.
Got it.
It does happen.
Got it. Wow. So why do you think the hiccup happened they were under contract, you said in August, September, October, November, that's almost 4 months, to, I guess, realize that this $5,000 debt needed to be taken care of. Just out of curiosity, to the best of your knowledge, is this something that, gets pulled one more time 1 week before closing, and that's why it wasn't discovered till 5 days before closing, or could it have?
Very, very good question, Yoshi. That's honestly probably exactly what happened. When we pull somebody's credit, we can see a chain of credit pulls within the last 120 days. And lo and behold, this mortgage company pulled their credit in August.
Yes.
And then pulled their credit on October 31st. Why would somebody need to do that? Well, we believe they never really qualified it to begin with, because that credit report, the original pull in August, was still a legit credit report.
Right.
So the only reason through deductive, thinking is that they were trying to see if their scores had come up to qualify for this particular loan program, and it didn't come up. And so now they're trying to sort of massage or lead this client's file, in a certain direction, which it never could have to begin with. So, one of the interesting things as well is that my real estate partner had been complaining to me about this particular lender for a long time. He never answers his phone. He's never available. He doesn't seem to care.
Got it.
And so one of the pieces of advice that I would give is that you really need to work with a professional real estate agent that has a professional mortgage partner.
Yes.
That's going to be the wingman.
Right.
I'm a human, I'm fallible, I make mistakes.
Sure.
But I treat my real estate agents like they are the client.
Right.
Because at the end of the day, if I don't do a good job for the realtor, I'm not doing a good job for the client.
Right.
It's sort of this, help one person, you also help the other.
Exactly.
By doing that. And so, it was interesting because this real estate agent had complained about this lender since they went under contract in August. So,
yes.
That's a good indication. You really need to trust your real estate agents too.
Absolutely. Something I learned from you, I don't know if you know this, because I never told you I learned this from you. I happened to just learn it from you, and that's how we met. One of the things that I do when I represent a buyer is I reach out to the loan officer once a week to see how the loan is going, so that I'm not getting surprised 5 days before closing. And I learned that from you because you proactively, on a transaction that I was listing, reached out to me once a week just to voluntarily give me an update. And I thought, wow, that was really cool. That's never happened before. And I took a page out of your book, and now I proactively, when I'm representing the buyer, will reach, because you're the only loan officer I've ever worked with that's done that proactively to me. So I now will do it just so that I can make sure that everything's looking good. The client is, not needing to send the loan officer any more docs or whatever, so that I can stay up to date with the buyer of the house that I'm listing. So I think, one, the weekly update that you do, that I learned from you, is fantastic, because I think it eliminates this gigantic surprise. At the end, you're going through the process, making sure everything's looking good. Then you're updating, this other agent who you're technically not even really working with. You're usually working with the buyer, and then this is the listing agent. But you're calling both parties, both agents, which is really, really cool. And I could see how far more surprises are going to happen when you do that.
That is so funny you mentioned that. I remember the transaction.
Yes.
And the agent representing the buyer is the same agent on this.
No way.
Transaction. Yes. But it's important that the lender, it treats everybody like it's a collaborative effort.
Yeah.
Because it truly is, right? You can't buy a house without the seller.
Yes, exactly.
And vice versa.
No, absolutely. Thank you for sharing that. Okay, guys, we are going to take another commercial break here, and when we come back, we're going to go through the step-by-steps of obtaining a loan. So if you've ever thought about purchasing a home, never have done it, and you may have heard these stories where someone bought a home and they had to send a million different things over to their loan officer, just so that they knew if they were able to purchase the house. We're going to talk about what goes on with these different steps so that you have a better picture when you go through the process to know what to expect. So, on that note, Mohammed's going to help me go to commercial break right now. Hi, I'm Yoshi Shiraki, the author of the book, My Body's Just For Me, the book written for children to educate children on the prevention of child abuse. With the assistance of multiple-time best-selling author Richard Paul Evans, we were able to publish this book as a tool to help break the ice in an easy and innocent way to help children understand and learn how to speak up and communicate. I've been invited numerous times onto Good Things Utah to discuss the importance of good communication with your child in regards to abuse, and also to discuss how the book My Body's Just For Me is a great tool for every parent when having that tricky conversation with their children. For more information on the book My Body's Just For Me, please visit www.protectourangels.com today. And remember, the more we focus on prevention, the less we'll have to focus on rehabilitation. All right, you guys are listening to K-Talk Radio. This is the show, Utah Home Sweet Home. The channel is 1640 AM. I am your host, Yoshi Shiraki. Our special guest here in the studios is Joel Stice. Joel, thanks again for joining me today. I really appreciate it. I think the loan process is probably the most intimidating process when I work with buyers in general, because they're nervous if the loan's going to happen or not, because they have fallen in love with the house that they've seen. And there's a lot of steps that go through real estate transactions, from a realtor point of view, from the home inspection to the appraisal to shopping to submitting the offer, due diligence. But there's also a lot of steps in getting the loan too. And when you break it down step by step, it's actually not that intimidating, right? Yeah. You look at a list and you're like, oh my gosh, is this going to be able to? Am I going to be able to buy this house? And what I like to do is just help the listeners understand it's not intimidating. It's just a step-by-step process, like anything that we've ever learned. Tying our shoe step by step, right? First you cross the laces, then you pull them, and that's step one, right? So let's go over the process of getting a loan. So let's just say I've got a client, shoot them over to you and say, hey, Joel, got a client who's interested in buying a house. He would love to live in this part of town and is hoping to, have this size house. Would you mind qualifying them And we make the introduction, they reach out to you. What's the very first thing that you do with these people?
It's a very probing conversation. I really want to hear their story.
Okay.
A lot of loan officers tend to say, "Oh man, so nice to meet you, super excited, Yoshi's great, fill out this loan application online. We'll reach back out to you." But you're doing the client a disservice by doing that. And the reason is that you don't get to hear their story. So the first step is to really ask a lot of open-ended questions to find out who they are, what they're wanting to accomplish, when, how much they want to pay, how much they can put down. All of these things you're discovering through this initial conversation. And that way you can meet their needs, of course, and their wants.
Got it.
So through that initial phone call, usually we'll take the loan application on the phone.
Got it.
Yeah. And that is, you know, in a lot of ways the first step.
Okay.
And from there, depending on how credit looks and, you know, how realistic they are, we will then send them a needs list of things that they'll need to provide us for a pre-approval, as well as schedule with them an in-office meeting.
Okay.
There is so much that can be gained from meeting somebody face-to-face.
Got it.
And we're in a society right now that's very disconnected.
Yes.
And when you're dealing with a situation that involves money and shelter, it's super emotional, and it's really great to meet the individual families or you know, person that wants to buy, so that they can see the whites of your eyes and know that you're a caring person with a family of your own.
Exactly.
And usually we don't have them come into the office until they have sent us their, you know, income documentation, their W-2s or their tax returns, and we want them to come in, you know, so that we're as prepared for them as possible. So we usually like to get this set of documents up front.
Got it.
And sort of vet them before we meet them, and make sure that we're prepared and have a good understanding of, you know, how we can help them.
Very cool. You kind of just touched on it a second ago. I was going to ask what kind of docs, when you say you're asking for docs, and then you mentioned W-2 and tax returns, but what other kind of docs are you asking for, just so the listeners have an idea of what is expected?
Driver's license. Usually we ask for 60 days worth of bank statements.
Okay.
401k documents, if they have that, is another you know, piece of information. If they've been recently divorced, you know, we of course we don't specifically ask those questions, but if that does come up in the conversation, and you know, they're obligated to one former spouse or the other, we need to see those legal documents. Bankruptcy documents are really important to see as well, to make sure that we can actually determine when the bankruptcy was discharged, so that we can determine if the proper length of time has elapsed for them to qualify for their new home.
Okay, what is that proper length?
Well, for a conventional loan, it's typically 4 years unless there are some seriously extenuating circumstances. For FHA, it's a shorter time period. You can even, this is probably going to be a surprise, but you can have had a Chapter 13 bankruptcy and buy a house after 12 months have lapsed, as long as the bankruptcy courts will approve you to enter into a new debt. So,
very cool.
Yeah.
Oh wow.
That's an FHA loan.
Got it.
Yeah. VA has its own time frame as well. So.
Okay, gotcha. Yeah. So in your case, and that was actually going back where you say they come into the office. There are a lot. I would say the loan officer, in many cases, is probably, I'm trying to think, probably the only person through the transaction that in many scenarios never actually meets the client.
Right.
Because the home inspector will meet the client when they do the home inspection. Of course, they meet the real estate agent. They meet the title company the day they go to sign. I guess they don't meet the appraiser, but take us back to that meeting, because there are a lot of loan officers that, you know, whether it's needed or not needed. Obviously, you're doing it, and maybe that's just for a service, or maybe you're finding value. Either way, it's really cool because it is a step. It is an individual that the buyers, they're sending all this private information to some individual who they may never even ever meet. So why do you guys, if you don't mind me asking, have a in-office meeting?
It's a great opportunity to build rapport.
Cool.
Some of the listeners may, in their minds, think that the lender guy is sort of this dishonest, slimy person that, it's sort of, they have a negative connotation,
Yeah.
probably from the financial recession
Oh,
that occurred,
sure.
and, there was a lot of dishonesty there and mistakes were made for sure, but it's just a great way to build rapport and to know who your clients are, and gain a greater level of trust. Not every client can,
Yeah.
and not every client wants to.
Sure.
That's the truth. But whenever possible, we like to meet them in person, because we want to know who they are.
Yeah. Very cool. Okay. Thank you. All right, so now you've got these docs. You've gone through the process. It looks pretty good. Now you've invited them into the office. In this particular case, that's a step that you will do. What happens next?
So from there, we typically send them back out to meet with the realtor with the pre-approval.
Okay.
And the pre-approval letter we have generated this knowing that we have verified their income, we've verified their assets. We know what their credit looks like and that it's sufficient, and we have what's called an automated underwriting approval. Those are 4 of the major pillars of a home loan.
Okay.
And we don't just take a phone call. This is what we don't want to do. We don't want to take a phone call, have them tell us what their income is, and then say, you're pre-qualified, you're pre-approved. That is a recipe for some heartache, and they
Right.
may not actually be, or there may be a change to things. By the time they're sitting at the closing table, their payment might be higher. So many things can go wrong by doing that, and so we, and unfortunately, some of our peers do that. They're talking to somebody that's an auto mechanic, and they make an hourly wage, but their pay stubs are really complicated. They
Sure.
get some of this strange pay that really needs to be scrutinized and calculated correctly, so that there's the foundation of income is set. And when they're out there and they're looking at a home, they can really bank on that pre-approval and the loan program and the loan officer. So we do some due diligence and heavy lifting it, as we say,
Got
on
it.
the front end, so that everything goes smooth after that.
Got it. Okay. Which leads to a question that I wanted to ask you. What's the difference between what's happened when someone is given a strong pre-approval letter versus one that hasn't done a lot to, there's a pre-approval that sometimes could be absolutely useless.
Totally.
So what's happened in that process that makes one a strong pre-approval letter, which is why real estate agents like to work with loan officers like you, because I know that if you pre-approve someone, it's strong, and I don't have to worry about this falling apart at the last minute.
Right.
What are the pre-approval letters that are not strong? What didn't happen there? What's the difference between the two? You talked about the 4 pillars. So
yeah,
sorry.
I sort of alluded to it, but this happens all the time. How much do you make? How are you compensated? The client will say, "Oh, I make $22 an hour, and I work full time."
Got it.
Okay, great. Then they send us their pay stubs,
Yeah.
and they don't work full time.
Oh,
Right.
right.
Their pay stubs are not showing full time work. It's maybe not quite full time, but pretty close. But it's still not full time, and that can change everything, right?
Sure.
But had I just said off of the conversation, oh, $22 an hour, oh, full time.
Yeah.
You can calculate that income,
Right.
but it's not documented, it's stated, right?
Right.
And now if I wrote a pre-qualification letter, a pre-approval letter, that client goes on their merry way
Yep.
with the realtor,
Yep.
they get their hopes up, they go looking at homes, and then it won't work.
Right.
And so, real estate agents are paid real estate commissions. They don't get paid until the loan is closed.
Sure.
Same thing with the lender, and it's a huge waste of time.
Yeah.
And there are some institutions out there that pay their loan officers a set salary, so they get paid
Yeah.
whether the deal closes or not.
Right.
So they're not incentivized to really comb through
Right.
this client's situation, because at the end of the day, they're still getting paid.
Yeah, that makes sense. So probably a good lesson from that is, if you're a buyer out there and you're shopping and you spoke to a loan officer and everything was stated and you haven't sent anything in yet, you might be in for a surprise down the line.
Yeah.
Yeah. Good thoughts. Okay. So now they're out there shopping, and let's say they go under contract. Typically they'll have about 10 to 14 days of due diligence period where they're going to do a home inspection and all the things that one would want to make sure this is the house for them. Are you doing anything in this 10 to 14 days, or have you already done what you need to do until the due diligence period's over?
Yeah. So within that sort of initial phase of them having gone into a real estate contract with a seller, in that due diligence phase, we're ordering some title information from the title company.
Cool.
We're getting the insurance contact information from the client and getting them their insurance set up on the home. We may be updating a few other miscellaneous items that we might need. Sometimes it takes the client a little while after they are pre-approved with us to actually find the home. So if 2 months go by, well, we'll need more updated, pay stubs would be an example that we would need to update, or an updated verification of employment as well.
Got it. Okay, perfect. So then, hypothetically, everything goes well, home inspection's great, buyer decides to move forward. Once they've given you the word, and sometimes at the end of the due diligence, but sometimes it's sooner because they know they're moving forward, then that's when you order the appraisal. Is that correct?
Yeah, and typically the lender and the real estate agent are communicating enough that they can say, are we okay to order the appraisal?
Got it.
There's no reason to have a buyer pay $525 for a home appraisal if the home condition is so poor that they end up canceling anyway. So usually we wait until the client has decided that, okay, this home is in good condition, we're going to keep moving forward, and then we order the appraisal.
Got it. Okay, perfect. So now the appraisal comes back, assuming, we're going to say most of the time it appraises, right? So assuming it appraises and everything's running smooth, and there's surely a whole nother situation if it doesn't, but assuming it does in this particular case, then you're typically about 7 days from settlement. Is that correct?
Yeah, give or take.
Give or take?
Sometimes if we're moving quick, it's like, okay, Yoshi, we need to order the inspection quick, so that we can order the appraisal quickly and we can close within, less than 30 days. And,
Got it.
And you can close loans in less than 30 days, but if you can condense the inspection period and order that appraisal quickly, it does expedite things. But yeah, after an appraisal is back, about 7 to 10 days.
Okay. What's happening during this period, this last 7 days before they go closing, before they go to settlement, that you're doing? You always hear of those people that last week they went and bought a car, right?
Oh, man.
So there's one more pull of credit right at the end, if I'm not mistaken. What's happening that last 7 days?
So there's some internal checks that are done.
Okay.
They're called undisclosed debt notifications. So it's not a full credit pull, but it's sort of like a check to see if new credit was opened.
Got it.
And that's not necessarily a deal killer in the sense that credit needs to be repulled if we see on this report that they may have opened a new credit card or bought a car. But what we do need to determine is, will their debt to income ratio work now with that extra monthly cost of a car or a credit card? So for all the listeners out there, biggest piece of advice, do not, I repeat, do not open new credit until you have closed on that home and you have the keys in your hand.
Right. I have heard of the car situation twice.
Mm-hmm.
Somebody was under contract, went and bought a car in that time period, then they found out with that new debt to income ratio scenario, they weren't going to be able to buy the house, and they fell out of contract. And I heard of the RC Willie once.
Oh yeah.
Someone was super excited for their new home and wanted to go buy a bunch of new furniture, went to RC Willie.
Yep.
And
they get you on the financing plan.
Yep.
And that will show up on this report.
Yep.
And that does become a problem.
Got it.
Yeah.
Okay, yes. All right, and then let's just wrap this step by step up with the closing. So we call going to closing when you show up to the title company and sign docs, but really we're using the wrong word if you're looking at the contract. It's really we're going to settlement.
Yeah.
Because closing, and I think this is where a lot of buyers think that they're going to get the keys the minute they're done signing all those papers. That's just really settlement, just the signing over at the title company. Closing actually happens after the bank has funded and then the state has recorded you as the new owner, which can be sometimes the same day or the following business day. Can you share with me a little bit what happens after all the docs are signed? What happens to those docs for funding to happen, for you guys to fund it? You get the docs back?
So the title company or the representative representing the title company will send the loan company, Citywide for example, will send them back this package with all the borrower's signatures, all the client's signatures.
Okay.
And they will comb through it, make sure everything looks good, make sure that all the clerical stuff is where it needs to be. And then there are a few other items after the client signs that we have to clear.
Okay.
And then, and this all happens internally. The client buying the house would really never ever see any of this, but there's some checks and balances that go back and forth. And then the mortgage company communicates to the title company that they are okay to, quote unquote, release and record is usually what you'll see internally between the two companies.
Got it.
Which means that the title company can disperse funds to the seller and record at the county that the title is transferred to the new buyer, and that is really the close of the whole thing, and that does happen same day.
Great. You mentioned there's a few things that will happen internally. Is there ever times where those few things you find there's a hiccup in it, and now the buyer has to adjust or do something, and what would that be?
Maybe maybe a signature was missed.
Okay. Something small.
Something small. We had a transaction this week actually where it's called a prior to funding conditions is what you're referring to.
Okay.
And the contract had some verbiage on it that was a little unclear, so we, the underwriter of this loan, requested that we ask the buyer and the seller to clarify some of this verbiage.
Got it.
Because it actually impacted whether the numbers.
Oh, sure.
So we had it clarified and everything was fine, but had it not been clarified, that loan would not have been a complete loan, and we would have had to push to the following business day.
Got it. Okay. Very good. It's pretty painless.
Yeah.
Okay, awesome. Excellent. All right, so we are going to go to another commercial break here. When we come back, we're going to be talking, I'm going to be asking Joel some questions. Questions I get asked a lot representing clients as a realtor. It's amazing, Joel, how many times they'll ask me the question, and this goes back to the relationship between a lender and a client oftentimes is so minimal that when a client has a financing question in regards to their loan, they don't even think to ask the loan officer because they hardly know. They never met him. Mm-hmm. And so they usually ask me, and of course I, direct them to the best person to ask in regards to your financing will be your loan officer. So we're going to go to commercial break. When we come back, we're going to ask Joel some questions. And Mohammed, I think I know how to I'm going to, maybe you better do it. Okay. With smartphones and technology making life a little easier, the Snap Leash has also been designed to make life a little easier for you and your pup. Whether you're out on a stroll in the park, or possibly a walk through the city, or maybe even a hike up in the mountains, the Snap Leash is the perfect leash for you. The Snap Leash can easily and conveniently convert into 7 types of leashes, making the Snap Leash the most convenient leash in the world. What other leash do you know that is 7 leashes in one? With the Snap Leash having appearances on the Today Show in New York City, TV 47 in Dallas, Texas, and ABC4 on Midday Utah, you are definitely going to want to take a peek at what the Snap Leash can do for you and your best friend. Make life a little easier for you and your pup, and visit www.snapleash.com today. All right, thank you, Mohammed. So every week I take a glance at the producer and think, I could do that. And Mohammed's doing his thing here on the keyboard. And so I asked him last week if he'd let me try this week, Joel, to do it. And as you can see, I'm not doing a great job. I really should have just sat in the chair I normally sit in and let Mohammed sit here.
You're doing great.
Thank you, Mohammed. Okay, very cool. So we've got a little bit of time left here before the show ends. Joel, one thing that I want to share with the listeners is we not only met through just the standard real estate transaction where I talked about how you called me every week. I was so impressed. But we became friends, and now we sit. We're both in a real estate mastermind that we meet once a month with some pretty cool dudes.
Oh yeah.
Yeah.
I'm definitely a small fish in a big pond there. It's awesome.
Yeah, these guys, we belong to this mastermind where we have people that own self-storages, facilities, strip malls, guys that are building and developing large apartment buildings downtown, guys that are flipping tons of houses, wholesaling, tons of rentals, and some of the guys that are doing hard money. And that's where I'm going with this is you do a little hard money.
Yeah.
I know we chatted briefly about this. This might not be the most exciting topic, but what's really cool about what you do is you are that Swiss pocket knife. You've got a lot of different things that could help people in random situations, right? And so, do you mind sharing a little bit with our listeners about the types of options, and not to say that they would call you for these options, but just in general, because of your knowledge of hard money, if somebody found themselves in a tricky, sticky situation, something that they didn't even know about, would you take a minute to share some options out there, that might be beneficial?
Yeah. There are several ways to get into the hard money scene.
Okay.
As far as a client, you've got real estate agents that do participate in hard money, whether they lend their own to each other, or they borrow it to do specific real estate transactions. But the type of hard money that we've been involved in is helping people keep their homes.
Got it.
They may be behind on their mortgage payments. They may be getting a lot of mail from the banks saying that they are going to lose their home if they don't become current because they're super behind. And so before that ever happens, we would come in and essentially pay off their loan and become the lien holder. And so we help people keep their homes that they have a lot of equity in,
Yes. Wonderful. I wanted to share that. I wanted to take a second just to share that because if anyone that's listening is in the future finds themselves in a sticky situation, there is a plan B. There's actually several plan Bs, right? But you could always sell it if there's a lot of equity. But if you wanted to stay there, it's good for people to know that.
Yeah.
Okay, so you guys have been listening to K-Talk Radio 1640 AM. This is the show Utah Home Sweet Home. I'm your host, Yoshi Shiraki. Our guest has been Joel Stice. If you have missed any part of this show, you can check out our social media platforms. We post these on Facebook, YouTube. You can go to www.utahhomesweethome.com. And you can also reach out to me personally if you would like at 801-810-4475. Joel, where can our listeners reach out to you if they want to get in touch?
Honestly, just Google Joel Stice Citywide Home Loans. You can see really recent reviews, current reviews from real clients. That's the best way to do it.
Great.
Yep.
Excellent. Well, thank you so much, Joel, again for joining me today. That is the end of our show. I hope everybody has a spectacular weekend.
Thanks.
Thank you. All right. I'm going to hit the Facebook Live stop button. One second. Sorry, Houston.
Salt Lake City, and all across the Wasatch Front. Bring you live, local, two-way talk.
Oh, perfect. Thank you.
Howdy, folks.
There we go. Awesome, Joel.
That was sweet.
That was fun.
That was
Thank you so
awesome.
much.
Yeah.
I appreciate that.